Hello, fellow traders, ladies and gentlemen. Never thought I'd see the day they ignore a government shutdown, but they did. Well, today we're going to talk about the general proper risk management system that I always talk about. I'm going to go over it a little bit today in the show because I've had a lot of, let's say, feedback on that or kickback on that from people that have watched the videos who still don't believe that charts don't make you money, who still don't believe that risk management's important, and who still don't believe that strategy is more important than the charts. So I'm going to go over that again today in detail. That said, the people who do kick back on it don't seem to have a YouTube profile. They don't seem to have a proper name, just a letter and a bunch of letters as their username. So they could even be bots. I don't know. But for some other reason, I do get some question on that particular part of the business. People seem to think that charts make you money. Some even boast that they always have a win rate and they make money from that win rate, which is always quite interesting to me. Guys, don't forget, trading is risky. If you don't like risk, probably shouldn't be trading. Just have to bring that up because you guys need to know that. Particularly important. It's funny how every single broker tells you before you start trading that 75% of traders lose money. They even have a little banner running over their brokerage page, and we all still believe that we're going to be part of that winning 25% somehow, and we're going to make loads of money. I had an interesting one, guys, this week where I saw a guy saying that if you want to turn $5,000 into $100,000 or $200,000, I had to see this. The basis of the principle is this, okay? This is brilliant. Basically, what you got to do is you got to wait for the markets to crash. You got to wait for the markets to fall down. And then when the markets hit the bottom, you should buy. That's brilliant. Absolutely brilliant. I couldn't have thought of that. There is one problem with it, though. I've tried it about 100 times. And every time the markets hit the bottom, I don't have the nerve to buy. It's kind of like, well, has it hit the bottom or hasn't not hit the bottom? Who calls the bottom? Who says the market is now finished with its crash? So now take all of your money, because this is the principle, take all of your money and throw it at the market because you think it's hit the bottom now and it's going to turn around and go up. I normally find myself getting back into the market and investing and throwing money at the market when it's about halfway back up, when I've found a little bit of confidence and I see that the market's actually turned and it's going in the right direction. That's kind of when you start getting back in. Nobody that I know has actually got the nerve to say, the market's at the bottom now, so I'm just going to throw all my money at this market and see what happens. I just had to laugh when I saw that. I thought, wow, that's ingenious, that idea. Morning, Blue Mango. Mr. Z, good morning. Carl, how's it? Elaine, lovely to see you. It's always good to have you guys on board and back. I know the show might be a bit early for a few now. I might have to move the time. I did discuss it last week, but I thought, no, I'm not going to surprise you with a new time this week. We'll just see how it goes. But I know that the times have shifted in Europe, so it might be a bit tricky for some, but I don't know if the 2-hour difference is that bad or not. We'll see. We'll see if it affects everyone or if everyone gets used to the time that we start. But very much the time has changed overseas, but it doesn't change on my side. Here in Cape Town, we just keep the time the same, and then we just have daylight till 9 o'clock in the evening or 10 o'clock in the evening in summer, and in winter we have daylight till 6 or 7 in the evening. So it doesn't really make much difference to us. But for those of you overseas, it makes quite a big difference. So they move the time out an hour every year, and that kind of mixes with the times. I just try my best to try and work around it. So on Tuesdays we have this earlier show, Thursdays we have the later show, so we catch some of the other people overseas. But if this is too early for everyone must just let me know, and I'll move it out a little bit, and we'll see. Mr. Z, I keep losing money because I try to catch tops and bottoms. It's my biggest problem, and the guy suggests to do this. Good luck with that. Such a good point. Such a good point, which is why I was laughing at it when I saw it. I thought, they make it sound so easy. The guy says, nah, you can turn small money into big money easy. All you got to do is wait for the market to hit the bottom and then just take your whole $5,000 and throw it into the market and you'll make a fortune, which is true. I mean, he's not lying if you catch the bottom, but really, who calls the bottom? Who knows when the bottom's hit? You know what actually happens in a crash? And this is actually quite an interesting thing for you guys to know. Sorry, I'll move my picture back in a moment and we'll have a look at the charts, and we'll go over the markets in a moment and we'll go over the story of risk management and all that in a bit. But what normally happens in a crash is effectively it starts crashing. So you're at 6,800 on the S&P. It starts crashing. It goes down to 6,500, then 6,000. And people are looking at it and thinking, yeah, it's a bit of a correction. Then it goes down to 5,500. Ooh, it's quite a deep correction. Goes down to 5,000. Now you're calling the bottom. You're starting to call the bottom, but you don't really know if you're in a crash or if you're in a big correction. So you start calling the bottom. And it goes to 4,500. So more people start calling the bottom. This is it. This is as far as this market could ever possibly go. And then it crashes down to 3,000, a 50%. And you think, how did that happen? And you took all that money that you had, you called the bottom at 4,500, and it dropped all the way to 3,000 and wiped out that $5,000 that you so-called had, instead of you making the hundreds and hundreds of thousands that guy said you would make. That's what happens in a crash. And that's why it becomes insanely difficult. That's why we use these systems of risk management. That's why I'm going to talk to you about risk management today in detail, because risk management is so important to your trading. This is the point. And also getting into your trades at the right level. In other words, waiting for a counter trend, for the trend to break. So if you were looking at a crash, you'd be looking at a much larger size trend. Let me take my picture out the way. And we can go and talk about this just a little bit. Oh, let's get this right, eh? Get it out the way up there. So now it's a small picture, so now you're seeing my big face in the way. That might be a little bit better for a lot of you. But okay, let's have a look here. So for example, I'm using these charts today. I must use different keys to move things around. But okay, there we go. If this was to crash down, what you would need to do is to go onto a weekly and try and look at the chart from a weekly perspective and try and get the overall trend on that. And only when it kind of breaks that weekly trend would you want to go, all right, the crash is over, now we can start buying again. That would be a good way to get into the market with your small amount of money, which you want to turn into a gargantuan amount of money. If everybody in the market is making hundreds of thousands of dollars off of $1,000 or $5,000 or whatever, if everybody's so lucky and capable of doing that, then why do 75% of traders lose? This is a question that I always ask myself in the markets. Why? Why do 75% of traders lose? If everybody is so capable of taking a small amount of money and in a couple of weeks turning it into huge sums of money, the only people that manage to do that in the markets are people that are fortunate, lucky, something goes in their direction and they take a big profit out of it. That usually happens once or twice a year if you're trading anyway, and if you catch it right, good luck. But, you know, these guys carry on like this and it just drives me insane. This is Bitcoin. We have a short on this on the other platform, but it went against us a little bit. But we're not too badly off. It is in trend. It has hit this trend resistance, and it's also hit the 105 level, which is really important. There's also a couple of moving averages around here on the weekly and whatnot, the 40-day and stuff, I believe, that is also affecting it. It would appear then it wants to go short. I have a concern though. And that concern is the government shutdown is ending. The government shutdown is ending. Now, that could give us a bit of short-term happiness and excitement and people jumping for joy and that sort of thing. And it could send a lot of these things spiking up. It will settle down because reality will come back. And then CPI figures will start coming out, jobs figures will start coming out again. And they might not look that great because the government's been shut down. There's an extended pain here that might come about. So reality might come back after the initial relief. So I'm expecting a bit of a relief rally before we get into this situation of reality where they'll come back and say, well, wait a minute, maybe we should rethink this and start pushing things back down again. But my concern for the Bitcoin trade is this: if the stop loss is here, it might spike and take it out, which is possible but I don't see as much relief rally in the crypto as I do in the indexes. I see it more in the indexes. I think the indexes are going to have a much bigger relief rally than anything else. And then on the flip side, if things go pear-shaped with this deal that they've got on the shutdown, that could send things spiraling. So you've got to be careful of that as well. That's why the markets have been rather, let's say, iffy this week. A little bit quiet and a little bit, not much happening. My Euro Great British Pound trade that I had on here, the stop loss got taken out for a profit, but only a small profit. I think I made like $80 or something because the stop loss was here, the target was down here, and it shot back through the stop loss and wiped me out. This is okay because it's in a profit and I didn't lose anything on that one. So that's okay. US dollar, Canadian dollar. Why did I press that? US dollar, Canadian dollar. That one's also short. I've also brought the stop loss down into a major profit to protect things. And this is when we're going to talk about proper risk management and the difference between strategy and charts today, because that is quite important. Mario, hello from Puerto Rico. The trade EuroCAD on Friday, 4 puts before my take profit went down and stop loss. That's happened to me all the time. I'm thinking from now, if I'm in profit, I'm moving stop loss to 0 so I don't lose good strategy. Yes, Coral, good idea. That's the best way to do it. As you can see, this one, it went into a reasonable profit. Okay, this one probably went about halfway down. Target's down here. So at about 1-to-1, I moved it up to $100 in profit. But I think I actually moved it to cost when it was about 70% in as well. There's nothing wrong with that. Move it to 0, $10 in. Move it $10 in so that you pay the costs, that sort of thing. And always, then you lose nothing on the trade. The trade is free. If it turns against you, so be it. It's always tricky, when you're in a profit and it comes back and then next thing you know, you're in a loss. So it is better to manage your risk that way. Yeah, totally, Coral. Hi, Luigi. Good to see you. So let's talk about risk management in general. Let's talk about risk management, why we have risk management, and what it's all about. It's really important to understand that the charts don't make you money. Only thing that can really make you money in the market is a good business plan. And most people don't believe this. Most people think that charts are going to make them the money. And I can understand why. It's because you get into trading, you go on a course and you learn all about these charting systems, all these different charting systems out there. And then you get caught up in the never-ending cycle of doom, looking for new shiny tools in the hopes that some magic pull is going to fall out the sky and you're going to have a system that's just going to give you winning trades on a regular basis. And I understand that. I've been there. We're all looking for that. We're all looking for that magic pull that will pop out and it'll just give you a charting system to die for. One of these charting systems, all you can have to do is put a robot in place and click on it, and every trade, it'll just make you money. But unfortunately, that doesn't exist. And unfortunately, every single trade that you actually take on the market, on a chart, has a 50-50 chance of either winning or losing. And the reason for that is you're not trading against lines, you're not trading against candles, you're not trading against little midgets in the computer. You're trading against human beings, real human beings, people that want to trade with their money, people that want to buy and sell in the market. This is really important to understand. It's really important when you are trading to get this through your head, that you're not trading against lines. So what you use the charts for is to manage your trade and to be able to take a trade and to get some information out of the market and to try and gain some kind of an edge that'll make you feel more comfortable when you take that trade. So for example, you take this trade, you look at the trade and you say, well, this looks like a good short, so I'll take that trade. And you take the trade, I think I took it at around 141 up there. Let's take that trade short. That looks like a fantastic trade to take short. Now what you're doing is you're guessing based on the fact that it's at an all-time high, that it's overbought, that this has all happened in the past, whatever's happened in the past. So you're looking for resistance zones. Resistance zones hold liquidity. Support zones hold liquidity for buys. Resistance zones hold liquidity for sells. What is liquidity? It's money orders in the market. So you're looking for that because most of the money in the market is institutional, not retail. Retail makes up a tiny portion of the market. That's us. That's you. The retail trader. We don't move markets. The institutional money moves markets. So what you're watching in the candles, what you're watching in the charts, what you're watching in liquidity is the institutional traders moving the markets around. And they probably know something long before you and I do. They've got all the best information. They've got all the pro stuff. They've got all the insider talk and the other pros around them. And they've got that kind of info that you would just love to have on a daily basis. If you were to work on the floor in the Dow Jones, you would probably get that information as well because you're talking to each other and you know all that stuff. So when they move the markets, you can be assured that they know which they're doing it the right way and it's going in a specific direction. That said, they still trade against each other. They still have to watch what they're doing. Now you come along and you take that trade as well. But you can't really tell 100% which way the market's going. You've just picked a system to manage your trade with and say, on a 50-50 basis, I think I've got the edge on this if I go short. I think it's going to go my way if it goes short. Now, if you were scalping, you would probably win 8 trades out of 10 because you'd get it the right way and then it'll go against you immediately and you'd lose out. So you'd lose more on your trades than you're actually winning, which is where we're going to go at the moment with risk management. So the importance of risk management is making a profit. Because if you keep your risk less than your profit targets, then you have a chance of making more on your wins, thus making a profit. Now, as I always tell you guys, it's not the amount of trades that you win, it's the amount you win on your winning trades. Shall I say it again? It's not the amount of trades that you win, it's the amount that you win on the winning trades. So you are opting to try and make as much as possible of the winning trades and lose as little as possible of those losing trades, of which you will have loads of losing trades. So now we all understand that we're going to have loads of losing trades. We have to avoid losing loads of money. So you keep the losses as low as you possibly can. And that's simple, really. As I've told you guys before, just keep the loss the same on every single trade. That strategy That is strategy, and this is system. So now you're combining the system and the strategy into one, understanding that the system is only there to take the trade, place your stop loss, and place your take profit and manage the trade. But your strategy is in place for every single trade, and it works no matter what you're trading. So you can be trading absolutely anything, but your strategy still remains the same. So you can be trading orange peels, you can be trading crypto, you can be trading Forex, you can be trading shares. Doesn't matter. You keep the strategy the same. You risk the same amount on every single trade. In other words, the same percentage on any particular account. So if you have a $25,000 account, you risk 1% on that account, you're risking $250 per trade. Don't change that risk amount, because then you don't know how much you're making. Then you don't know how much money you're winning in the market. Now you have a set loss. You pick the stop loss before you pick the trade. In other words, you look at this and you say, I want my stop loss in that area. Therefore, how many lots, pips, contracts, whatever, can I take to the cost? Take that. You've got a $250 stop loss, and then you take the size of the trade. Then you work out if your profit is your risk more than your risk. Are you going to make a 2-to-1 profit or 1.5-to-1? 1-to-1's good enough, but you don't have to work according to that specific formula. You just need to make more than $250. You need to be making a profit, because at the end of the day, if you're targeting a higher level of profit, then there's a good chance you can get there, as well as once it goes into profit, as has this one, it went into profit, it was actually down at this level down here. I take the stop loss, I've moved it $120 into profit. This way I cannot lose on this trade anymore. I've managed the trade, I've managed the risk, with the hopes of it going all the way down to take profit, which is at a $600 level for a risk of $250. And now I'm not even risking anything. In fact, you're making a profit on the trade. Pretty simple, really, when it comes down to it. The point being that you have to separate the business plan from the system, and you have to manage the risk to stay in the game. I've been doing this for a long time, and the one thing that I figured out is by ignoring the old men that said to me, Rob, you don't need stop loss, you need stop loss and you need to manage your risk. And I used to say, you don't need a stop loss, you don't need to manage your risk, I know what I'm doing, the charts will make me money. And then you figure out very quickly that without managing your risk, you're probably going to lose money. Because at the end of the day, this trade, for example, this particular trade was short this morning, I moved the stop loss down into a profit, it went back, took it out. I have now lost nothing, absolutely nothing, which is smashing, to say the least. Absolutely smashing. I'm now in a profit regardless of what happens here. I've made the money, it's gone away, this trade is over. Do I revenge trade it? Do I get back into it? No, I look for a new trade. I specifically look for a new trade. That's what I'm looking for. So I'll leave that, and I'll leave it behind, and it's gone. It's very, very straightforward to separate the strategy from the system. The strategy is to try and make more profit, and the more profit you make, the better it's going to be for you. As I've said to you guys before, most of my profit is made on a couple of trades every year, and then a bunch of trades that reach target. But most of the trades are either losses or small wins because of the stop out. Like, for example, on this Euro Great British Pound, it gets stopped out for $80 or something like that. Now it shows as a win on your system, and you think, ooh, good win rate. But actually not. I throw that into my loss pile because it's a small win. It's a break even. It didn't cost me anything, but it's not really great because I risked $250 and now I've only won $80. But effectively, I was able to manage the trade, take the risk away, and get out of the trade unscathed with a move like this, because this is a sudden move. How many times these big candles take you out is quite insane. So you've got to be, like Carl said, you've got to be quick on the draw to move your stop loss up where you can and protect yourself, protect your trades. Don't get yourself caught up in an old sticky mess. For example, the Bitcoin trade is a good example of that as well, where, oops, don't want to move that around, where we were short. It's gone against us and we're in a loss at the moment, but you look at the trade, and if it takes a loss, it's going to take that minimal loss, that 1% loss, but you're targeting like $400 or something like that. So you're much better off. And if you put a zero onto the end of that, it doesn't sound like a lot when you're trading with a $25,000 account or a smaller number. When you start trading with bigger numbers and you start putting zeros on that, suddenly it's a $2,500 loss, or it's a $25,000 loss. You're targeting $50,000 wins. Then it starts to work on your psychology more. You have to get used to that. You have to get around that as well. But the principle works the same. Learn to do it on smaller amounts, learn to do it on demo accounts, learn to do it on funded trading, and then take it to your real account and move it on from there. So that's my rant on risk management today. If there's any questions, please feel free to ask them, and I'll do my best to answer them. It's been interesting. So where are we today? Solancelot says good morning as well, and Stefan, good morning. Good to see you guys. I see there are some people on board here now. So for those of you who missed that rant on risk management, please go back and enjoy, watch it, and ask questions. I go into detail about the strategy quite often. I still get a lot of flack on it. I still get a lot of people saying to me, but the market's not 50-50. A lot of people saying to me, but I make money on the charts. And I get it, because I did that for a long time. I mean, it must have been at least 10 years of my career where I didn't believe in stop loss, where I didn't believe in anything other than the charts. Thought the charts were going to make me money. I was looking for a new shiny tool every day, every week, magic pulls. It took me longer than most for it to hit me and say, well, wait a minute, Rob, you're actually you're gonna keep on losing here unless you start waking up. And yeah, that aha moment comes when the old boys turn around to you, see the gold jumped up. When the old boys come along to you and say, Rob, you can only make money by time in the market. In other words, you have to have an investment account to make money. That's the only way you're going to make money. And I'm thinking, well, if there's all these traders, even institutional traders, how are they making the money? How are they doing it? And that's when it struck me. There's no such thing as getting it right on the charts. There's such a thing as managing it and strategy. Now, one thing you do have to understand about an institutional trader is very often they don't just work on technical charts. They work on the fundamentals and the information that they've got. They know which way the money's flowing, and they base a lot of their information on that. So when we sit here and say, they're charting, nah, we're charting, we're looking for liquidity. They're looking for something entirely different. So yeah, don't base it on that, guys. Don't base it on the guys that are sitting there going, ooh, we'll trade this because it's going up. No, they look at something completely different. There is obviously big institutions like what was the turtle traders back in the day. We spoke about it in one of the videos where the guys had a win rate of 2 or 3 out of 10. And they were so profitable on their breakout system using the simple strategy that we use. Make more on your wins, lose less on your losses. And yeah, you get companies like that work that way. You get hedge funds, you get all these different kinds of things. But in general, they got a lot more information on a trade than we have. Now, there is something I'm seeing on gold here that might be of interest to you guys, and that is gold did break to the upside. It's broken to the upside really nicely, and it's broken through this 40.50. Remember, it was sitting between the 40.50 and the 39.50 down here. And it's broken to the upside now beautifully, and it's gone up. But it seems to have hit another little resistance level here. So what I want to do is just move this up here so you guys can see it very clearly. is another level right here at 41.50. 41.50. So it might need to break through that level as well. It seems to be quite an important level. It seems to be quite tricky. So let's keep an eye on that. So what are we developing here? Are we developing a new and wonderful level? We could be. We could be. But let's just have a look at this. Out of interest, I think this might be quite interesting. I think there might be another level developing here. Let's just see. And that level is at, yeah, 39, 34, something like that. Yeah. So yeah, there seems to be a new level developing here. Let's just see if it breaks through this height here before we get any further with that. Something going on out there. Aha, interesting stuff. Okay. I bought gold yesterday. Let's see, maybe it turns on me like you said. That is interesting. I hate to do that to you, Sir Lunch, but you know, I spotted this now. Yeah, this has moved quite hard. It's moved really hard. You know, another thing to look at, and don't take this out of your arsenal. I'm going to show you guys what to do. You know, when you're trading and you see this kind of move, just do yourself a favor and just take the relative strength index and just have a look. Don't leave it on your charts. It's irritating. Here's a problem, Sir Lunch. Look at this. Look at this. This has gone quite over the 70. It's overbought. Now, accepted that things can remain overbought for an extended period of time. In fact, longer than you can remain liquid in the market. Yeah, gold stayed overbought for a really extended period of time in the past, so it might do it again. So you're not really in big trouble, but it's way overbought, and that leaves you in a really precarious position. So if you're buying into something that's in trend, just check how overbought it is before you jump into it. Perhaps just give it a look and just make sure that it's not too overbought before you get in, because very often the institutional traders or the guys with the big money don't look at the lines that we do or that sort of thing. They look at the RSI, and if it's overbought, they start to sell, or if it's oversold, they start to buy, and that can move things around. So there is a good chance at this resistance level, and notice the confluence. The resistance level is there, and the overbought situation's in exactly the same place, which could start causing a short effect on gold. So by tomorrow, this could be starting to fall the other way. So do be careful of that. And also keep in mind, so we were talking about it earlier, that the government shutdown is possibly ending. So what does that tell you? They're going to start cycling the money back into the indexes with a relief rally, and that's going to hurt gold. So keep an eye on that. Be careful with gold. I've got a feeling that it might fall over. Might just fall over. Don't sell your trade based on what I just said, by the way. If you're in a profit, maybe, but yeah, no, just don't do that. But there's a chance it could break to the upside. It's a breakout, but at the moment, it's in a very, very precarious position. Blue Mango, I read somewhere that there was a fund here in South Africa that had a 25% win rate. However, they had the best returns for some time. Blue Mango, that's very often the case, and it's very much the same as the Turtle Traders was. There's a lot of company, a lot of people, You'll find that most traders that stay in the game, most investment companies that stay in the game, trading companies, most funds, most bigger traders, not the ones on YouTube. I'm talking about, you know, like me, for example. I'm talking about normal traders, people I know and stuff like that. The good ones don't have a high win rate. In fact, most of them have 25, 30, 40% win rate at best. And they're the most profitable companies around because of the simple analogy of it's not the amount of trades that you win, it's the amount you win on the winning trades. Because when they see a winning trade, they attack it and they go flat out on that trade. So the idea here, if you think about it, is to search out that you sort of testing, looking for that one trade, looking for those trades that are going to run for you. And when you find them, try and take as much profit as you possibly can out of them. That's effectively what you're trying to do, and take little losses on all the other ones. Long France, that's probably not too bad. I'll have a look at it now. What's your thought on footprint candles? Thanks in advance. Good point there. When it comes to different types of candles, and there's a whole bunch of different fancy systems and things going on. Remember what I said to you when I was talking to you about risk management today in the training part of the video, in the beginning of the video, where I went over in detail about risk management and strategy and system. Your charting is only a system. It's a system for you to manage your trade with. Don't overcomplicate it. Don't look for magic pulls. There's no magic pull. There's no silver lining on the other side of the chart. Keep it simple. Keep it straightforward. I prefer normal candles simply because I can look at the candle and I can see it's a big red candle. I know it's going down. It's a big green candle, lots of green candles. It's going up. I can see the tails on the candle. I can see where they're going. I don't know if you watched my recent video on ghost candles. Quite interesting, actually. Ghost candle, where an engulfing candle with a tail. People are using that to trade with. The candles give you a lot of information in the market. What they tell you is how strong the move is. They tell you if the buyers are getting back into the market, the sellers are getting back into the market, if it's a double top, it's a pincer top, all these different types of things. And if you start changing it to smoothed out candles or footprint candles, all these different types of candles, then you lose that ability to read the market. Keep the candle standard and read the market from the standard candle, because the standard candle as it stands can give you so much good information in the market. You'll see that I don't change the colors of my candles. I like them red and green because it's a spot, a corner of my eye. I can see exactly which way the market's going within a split second. Not to mention, you just have to get used to trading both ways, of course. And that, I think that's why people change the red, because they think it's bad. No, if you're used to trading both ways, it really doesn't matter what color the candles are, but it really is important for me to spot which way the market's going. And then the tails help me, and the patterns and that sort of thing. So for me, I'd rather keep the candles standard. I'd rather keep them just as they are. I don't trade with those systems if I can help it. Hello, Henny. Good to see you again. There was another one. I'll just look at France, the France 40. So let's just go and have a look at France, the CAC. Should be, I wonder if it's on this platform. I hope so. Gosh, I don't see it on this one. I don't want to change everything over now. Let me just have a look on the other platform here. Quickly, you guys can't see this one. I'm just having a look quickly. And want to see where it is. Where are you? Where are you? Where are you? Must I do a search here now? Obviously I must. Okay. $40. See what you look like. And yeah, the France 40 looks like a great buy. I'm just looking at my other charts here. And it's moving up. It's just gone through a double top, so it's broken that level. It's broken a resistance level, but it does kind of need another candle. But it's okay. It's changed structure. It's going to the upside. France 40, no problem. I wonder why don't I see it here? Let me just see. Doesn't give it to me. Okay. See France. It's under France. No. Oh, it's one of those platforms that don't have it. Okay, that's fine. No problem. But I had a look at it on my other one now, and it looks fine. It looks great. It looks like it's broken structure. It's going to the upside, so you're fine with along on the CAC. Looks good. Anything else? Let's just see. US dollar, Canadian dollar is still going in my favor, so I'm happy with that. It's going down. See, trading with price action is very much like trading with no indicators at all. You're basically just looking at the charts and deciding which way it's going to go. That's what charting is about. Everybody thinks that charts are going to make them money. I get a lot of people out there that are just not happy with that idea that charts can't make you money. But I was looking at Brent crude oil earlier, and Brent crude oil, if you look at it, has got a nice trend to the downside, a nice trend resistance here, but it's also got this movement to the upside. Looks like it wants to break through. If it breaks through, might get another good long trade here. That said, probably when I take it, it'll probably go against me again, but it seems to be developing a bit of a triangle here as well. Let's just see. You see, you could draw the trend in, but you've also got this triangular effect. It's squeezing, it's getting smaller and smaller. And those, just see, is it ascending or descending? I'm going to break out one way or the other. Let's see which way it breaks out and take it from there. But oil could break to the upside here. And if it breaks to the upside, then you've actually got quite a nice little long trade coming up, which will take it up to reasonable levels. And I think if the market settles, that might actually just happen. So Brent crude oil is looking like it wants to go up. Just keeping an eye on Bitcoin. I am short on it. US dollar CAD, still good. No engulfing there. Germany 30. This looks short, actually, oddly enough, with everything else. And there's a bit of a gap here as well. You know, this interesting that the DAX looks short. Based on the fact that people are expecting the indexes to go up later, and therefore there to be a bit of a relief rally, that does look really short. And it looks like it wants to go down. There isn't much room for it to go down, though. You know, it's got to this level here. Maybe it'll come down, take that, and bounce back up again. It is in a bit of a bearish trend. It does look like it wants to go down. But yeah, that one could be interesting. That said, the US 500's got the same pattern. It's also showing a little bit of iffiness here, like it wants to go down. Is that them sucking you in and then fooling you, and then later on when the news comes out, shooting it back up again? Or do they know something that you and I don't know? Maybe they know that the deal is going to fail. Or, as always, with these news items, here's the things with fundamentals that I found through my entire career with fundamentals. Every time I try to trade with fundamentals, I get the news and I think, ooh, that's good news, because now I think that the government shutdown is going to end. So the immediate reaction is some kind of euphoria. So we're going to have a relief rally, and that's the immediate thought. But then the guys on the inside with all the gears turning in the wheels and all the rest of it that have got all the information are looking at it and saying, yeah, but if the shutdown ends, what about all these jobs figures? What about all these CPIs? What about all this information? That's probably going to be negative. That's probably going to be bad. And it's going to send everyone spiraling back down into reality. And then they start looking at the whole market with a different light. So while you're thinking buy, 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 they're thinking maybe we should sell this market and take the money. But what they'll do, they'll push it up a bit like yesterday. And then when everybody's thinking of buying, they're going to sell it off. And that is something you have to keep your eyes on. The fundamentals used to catch me out quite a lot. That's why I stopped trading with small-time fundamentals and small-time news. Now, that said, I mean, a government shutdown should be big news. But the thing that I noticed really importantly is during the course of this longest US shutdown in history, it didn't affect the markets in the slightest. In fact, the markets just kept going up and people just kept on buying. So nothing happened. Now, when they decide to reopen it again, now suddenly everything's going to happen and it's just going to keep on going up. I don't think so. I think you might get an initial bounce, an initial bit of ooh, but other than that, I think they're going to surprise us. Now, I'm in two minds. I'm looking at this and thinking, well, it could break to the upside and go to the 7,000. Actually, we could have a good Christmas rally after all because everything's hunky-dory. Or maybe not. Maybe all that other information is not going to be so great. So there you go, guys. So you thought trading was easy. You thought that trading was easy. You thought it was all about, oh, you know, they're going to end that tonight, so everything's just going to go my way. And then I just threw a spanner in the works for you just to let you know that trading is just so easy that you can take $5,000 and turn it into $100,000 in a week by just simply buying at the bottom. You know, when the market crashes and it's at the bottom, just take all your money and throw it at the bottom and just wait for it to make you hundreds of thousands of dollars. Of course, if you have that kind of information and you know where the bottom is and you can pick the bottom and grab the bottom at the right spot, you know exactly how to do it, then of course, easy, isn't it? So easy. Markets are easy. How many comments have I had from these guys with no name where they say, I do it all the time. I've turned $1,000 into $100,000 15 times, and I've done this and I've done that, and I'm brilliant. And then I think to myself, yeah, but you don't even put your name out there. So, yeah, that's interesting. Telling me this stuff and how brilliant they are, but they won't even give me their name, tell me who they are. Crazy. Probably just guys out there that have been pushing this narrative that you can make loads of money just by simply throwing a bunch of money at the market. And it's easy. It's really easy. And they're trying to make a profit out of it. So they use maybe, I don't know, pseudonyms or something to try and, you know, sort of stop people like me from telling you that it's not that easy. Okay. That's exactly it, Sir Lunchlot. The market always seems to do the opposite to what the news says. You know, there was a time when I used to call the jobs figures. That was the best time, man. I used to, every week, I'd wait for the jobs figures. I don't know why, but I did. And I'd be like, oh, more jobs, less jobs, whatever. And I'd call the market. And I got so tired of calling it wrong. And then I realized that I'm actually getting that 50-50. Basically, half the time I'd be right and half the time I'd be wrong. I thought, well, if I'm calling it based on the fundamentals, and half the time I'm right, half the time I'm wrong, then what's going on? So I started digging deeper into it, and I found out that these guys in the background with all the gears turning and whatnot, don't just look at the overall announcement that you get 20 minutes after it's been announced. Okay, it's not 20 minutes, but anyway, you know, you get the announcement. They've already had the announcement for a while, and it comes to you pretty late. And they say, oh, jobs figures are 250,000 jobs employed, blah, blah, blah. And you think, oh, great, buy. And then it starts going down. And you think, why? That's because they've been sitting mulling over the intricacies of the whole thing and the adjustments and things that happened last month against this month and all these little inside bits that you don't have. You don't know this stuff. And they just turn it against you. A bit like now with what I said to you with the shutdown. You just see the overarching title, shutdown ends. People get euphoria from that and they're excited, not realizing that nothing happened when it was shut down anyway. But besides that, There's a whole bunch of things that the guys are busy looking at the moment. What's been affected by this? You know, how many jobs were lost because of this? How much money was taken out of the system because of this? Is there going to be a rush of money into the system because of this, which could have cause and effect on markets as well? You've got to think of that. It might have cause and effect on markets as well. So yeah, when you look at the news and you think, well, this is how it's going to go, or what actually happens at the end of the day is even worse. It comes to the point where the agreement's about to be signed and somebody goes, or Trump changes his mind and makes a tweet, or some ridiculous thing happens, and it all goes pear-shaped, and the deal doesn't happen, the government stays shut down. Suddenly that euphoria goes out the window, and it becomes total sadness, and everybody's like, oh, the world's ending, or something to that effect. There's always something. So for you and I to try and call those fundamentals is pretty difficult. Like I've said to you guys before, I just look for the larger picture on the fundamentals, the really big picture on the fundamentals, not these smaller things. So what I do is I just look at the chart for what it is. And look, the difficult part is obviously if you look at the US 500 and you say, well, I want to take a short on this. I mean, in the back of my mind, I'm thinking, well, is that a good idea? Because all normal conditions here on this would say to you, perhaps you should take the short, because it's kind of bouncing off the resistance. It's the second red candle. It looks like it wants to go down. There's a bit of a gap down here, and so on, and so on, and so on. So everything technically is telling you that you could possibly take a short here. There's even a resistance level. You look at it and think, might be a good short, but it's the US 500, and there's news lying on the table fundamentally, and that could just bounce things completely to the other side. So I'd rather just stay away from it and wait until that's all settled and then get into that. I don't even like being in the crypto in that scenario. Yeah. And then we should short the indexes now, huh? You see exactly. And I mean, technically, it actually looks like we should be shorting the indexes now, because technically, if I look at the US 500, that looks short. If I look at the Germany 30, that looks pretty short. So, a normal human being should be basically shorting the indexes now. But is that a good idea? Well, look at Brent. Okay, now watch me buy this at $65 again, and then it'll go tumbling down. Drives me insane. It really does. But what can you do? What can you do? I'm just going to go onto my other main account, not the one you guys know, my account. Where's Brent crude oil? Brent crude oil. Brent crude oil. You guys wish you could see this account, Brent crude oil. And yeah, that looks pretty decent actually. Breaking to the upside. Advanced order. Stop loss. Okay, we're going to buy, so I'm going to put the stop loss quite low down. And I'm going to buy Brent crude oil, guys. So if you're interested in the trade, I'm going to see what size I'm going to make this trade. $2,405 loss. Quite a lot. Okay. And then take profits. Yeah, let me put my take profit as usual spot way up there. It's a buy, it's a buy, it's a buy. I'm going to buy it on that. Risky, but what the hell? It should be a reasonable buy. So I'm going to buy it on that account. Okay, perfect. Okay, let me close this. Shouldn't be doing this on the live show, but there it is. Why aren't I buying it on this account? I'm not too worried about this. It's okay. Okay. US dollar, Canadian dollar, Germany 30, Great British pound. I wonder if I should buy on our other funded account, our other $25,000 account for us. Oh, maybe I'll see. I'll see a bit later. Yeah. I've taken it on my main account, Sir Lunch, so, you know, we'll see. If it goes wrong, it's going to cost me $2,405. So loads of money. Loads of money. Yeah. Okay, we shall see what happens with that. If I win, it makes me $7,000, so that's okay. Yeah. You got to be brave. That's an important thing in trading. You've got to get over those. But, you know, it's not really, it's all psychological. It's all in the mind. It's all in the fear. It's all in the fear of missing out and all that sort of thing. But once you get the point of you're losing less on your losses, you're making more on your wins, the amounts don't matter because you're going to make more on the wins. And for me to say, ooh, I made $7,000 today, or I made $70,000 today, should be irrelevant to any one of you. Any one of you. It's irrelevant because the amount of money that you make in the market is based on your capital amount that you've got available to spend. That's it. The amount that you're risking is based on what you're trading. And if you're trading with $100, you're not going to make $7,000. If you're trading with $100,000, then you might make $7,000. If you're trading with $500,000, then you might make $70,000. It's irrelevant. It's irrelevant. It depends who you are and how much you're trading and how much you want to trade. You know, and it depends what you're doing the trading for. Are you doing the trading to make a living, or are you doing it for fun? Do you have an investment account on the side that's making you all your money and then you're just doing this to keep you going? You know, I don't know. But the amount of money that somebody else makes on the market, and I see that that's what excites people, by the way, because I've seen the videos that are out there for people and what excites people, what makes people look. And most people are interested in how much money a person can make. And that's the issue here. How much can you make? And you're always thinking about how much you can make, but you're not thinking about how much you can lose. What's your risk? How are we going with the risk here? So the first thing you need to look at when you're trading is how much you're risking, how much you're prepared to lose before you look at those wins, because the wins will come, but you're expecting to win every trade. And I get that because you get into the trade to win. So the first thing you look at is how much you're going to win. The first thing you need to look at is how much you're going to lose. That's what you need to look at. Keep the losses the same. First, look at where you can put your stop loss, manage the trade, and then work out how much you can win. Don't worry about the loss. I mean, about the win. Okay, so Sir Lunch SLA is in with me. So listen, Sir Lunch, if this goes wrong, right, it's not my fault. This is not financial advice. It's just what I'm doing, right? Yeah, well, hopefully it keeps on going up, and that'll be great. Because obviously I've taken the trade on this candle all the way up. Honey, on my other chart, the candle's not like that. It's slightly different on the other chart. That's kind of weird, actually, come to think of it. Let me just check my other chart again. Just want to see something. It's kind of weird that Brent crude oil is the chart is not exactly the same. You know, this our charting system wants to mess me around, of course. Oh, there is a long candle there. Okay, and there is a bit of a triangle there. I guess, yeah. All right. Yeah, I'll give it its dues. I'll give it its dues. Okay, Australian dollar. Oh, no, that's gold. Australian dollar, Canadian dollar. Kind of bearish. Kind of bearish, kind of going down. Australian dollar, Canadian dollar looks like a short as well. If I look at it, you could probably get a short off here. It's a bit far away from there. And it's going to basically come down to here. I don't think you're going to get much out of it. But you could get something. It's not a bad trade. Come all the way down to the bottom here. Yeah, Australian dollar, Canadian dollar. Okay. Is gold going up or is it staying below that resistance? I don't know. Are you still in that trade, by the way? Do you still have that gold trade? Is it still holding on to you? Okay. Damn, if Blue Mango goes short, I go long and Sir Lunch goes with me. Does that mean I must get out of the trade? Very possibly. Yeah, where's Bitcoin going? Bitcoin's going back in my favor, so that's decent. But then Brent crude oil is decided. You know, when you take a trade, why does it always go into the red? Any of you found that? That's perfectly normal. Always does that. Take a trade, it always goes into the red before you get anywhere. Gold, weekly chart, gold. Let's go to the weekly. The gold weekly chart looks like one of those mountains in the Alps where you just keep on going up and up and up and up. But there is one thing that you need to keep an eye out for here on the weekly chart on gold. And that is this. That's what I call a pincer top. Two candles together with the two tails together like that. One green, one red going down. Okay, it's not perfect. It's not exact. But pretty much a pincer top. This is a very bearish signal in my life. Okay. It's telling me that gold will come back down to, yeah, about 3,200, somewhere down there. Why have I got that in there? Don't really need that there. Take it out. Dustpan. So it looks like it wants to come down to about 3,200. If that plays out, that's a pincer top. That for me is a short trade. I'm actually surprised that it's gone past the 4050 because that was very, very bullish, that run up. But that's a bit of a worry, that pincer top. So yeah, guys, if you're looking at this is the weekly. And if you're looking at a weekly, you've got a strong bullish candle on the weekly, which is telling you, yeah, go long on gold. Gold is long. Gold is completely long and going up, which it could be. But this could change next week, or this could change this week. You could get this coming down and you could have a long tail. You see, if this falls for the rest of the week, if this changes direction and goes down off of that support on the 4 hour. So on the 4 hour, you've got that resistance right there. We also overbought. Now, you go to the weekly, you see this major bullish candle. But the week, we're on Tuesday. We're not on Friday, we're on Tuesday. What could happen this week? You've got these 3 weekly red candles. Well, the undecided candle last week, 2 big red candles before that. This week, we've got a nice turnaround, green candle. But the week hasn't ended, and that candle isn't closed. It's open. Which means for the next 3 days, if this decides to fall down and leave you with a little bit at the bottom and a long tail to the top, you've got an inverted hammer pointing to the downside, which means you've got a bearish market, which means everything turns against you. That candle hasn't ended yet. So let's have a look at the daily chart. And on the daily chart, well, that looks great. We've had a few good days and very bullish days, very engulfing, to say the least. So yeah, it could be, but there is still the double top there that's developing. There's a double top developing on the daily, and that could be easily turned around. Is that a cup and handle, perhaps? Difficult to say. But anyway, it does look rather iffy to me. I would call it, as I stand at the moment on gold, if I was told, Rob, the only trade that you can take today is gold, and you have to choose now whether you're going long or short, I would choose short, even though it's in a bullish trend. I'd say I'm short on that one, going short. Okay. Yay. I risk 1.5% on this trade. If it comes back to test after close, add another total risk is 1%. Might be against it, but a bit of peace of mind for me at the moment. I risk 0.5% on this trade. If it comes back to test after close, add another total risk is 1%. I understand what you're saying, Tywald. What I'm going to say to you, I'm not going to be against it because I understand what you're doing. Believe me, I've done it before, and so has 1 million other people. So you're not the only one who's done that. Believe me, everyone has done that, okay? Because that's what we do. Because you don't want to put too much on the table. You don't want to, sorry, you don't want to put too many chips on the table. The downside to what you're doing is if you take a trade and you say, well, I'm going to take this trade and I'm going to put 0.5% down instead of 1%. Now, the problem that you have here, let's say you risk $250 on every trade. And you know your risk and you know how much you're risking. Now, there's nothing wrong with risking less because if you lose less, that's great. There's nothing wrong with that. But the problem is with trying to make more because you're not going to make more. Now you've got 10 trades on the go, 9 trades risking $250 and 1 trade risking $125. Now, when you risk that $125 instead of the $250, the trade goes for you. So now you're making 50% of what you would have made, what you expected to make. There's nothing wrong. All I'm saying is, at the end of the day, when you're looking at your overall profit scenario, you're going to sit with a mishmash of what's good and what's bad. You see, the trouble is, the trades that you think are good and you put the full risk on are the ones that go against you. And the trades that you think are bad and you reduce the risk are the ones that go for you. And you end up making less on your wins than you're losing on your losses. That's effectively where it goes. So you've got to be careful of that scenario very much. You don't want to get yourself caught up in that scenario of I'm making less on my wins. So it always happens. It's just Murphy's Law that the ones you risk less on are the ones that work for you. And the ones that you risk more on are the ones that go against you, which is why I emphasize trying to keep the risk the same. The policy of adding to a trade, dollar cost averaging on a trade, the attitude of I'll get into a trade, and then if it doesn't work out, I'll add more. And then I'll build the trade, is exactly what I said to you now, is the trade that you're trying to build is going to keep on going against you until it's a gargantuan loss. And the trade that you get into that you were right on and you risk very little on with the view to building it goes for you immediately, and you're only making that small portion of the win. So all the trades that you win are small portions of the win, and all the trades that you lose are the ones that you've tried to build and dollar cost average. Now, those ones that do go against you for quite a long time, and you keep on dollar cost averaging, generally what they do is they get to zero, and then you go, phew, ha, and you dump the trade and you get out because you're just relieved that you got back to cost. So that doesn't work for you either. It really doesn't help. So watch out for that. Be careful of getting caught up in that scenario. Even if you go like, I'm going to risk 10%, I'm going to get into the trade, and then every time it goes against me, I'm just going to add another 10%, add another 10% until I'm at my 1% risk. I'm going to keep on dollar cost averaging this trade down. By the time you get to that last add, by the time it gets back up to the cost, you just like want to get out because it's gone against you at such a gargantuan rate. So that's why that kind of thing doesn't really work out for you. Just by the way, just so as you know. So be careful of that. Always be careful of that. Rather just take the full stop loss and then when it's going in your favor, just move the stop loss up into profit or reduce the stop loss, reduce the loss, reduce the amount that you might lose. That's also an option that you have. You know, when you start going into profit, take the stop loss and move it up. You know, take it from 250, move it up to $50 in loss or $100 in loss, and then move it up to cost and so on, like we always do. And see if that works for you. See if that makes you feel better about your trading. That can also work. Was trade gold overpriced? Gold is overbought, seriously overbought, and that's why I'm against any long on it right now. Also average into trades, especially because you see Blue Mango does it as well. I got nothing against you guys doing that. I just need you to understand what you're doing and the scenario you're putting yourself. You know, if you average into trades, you need to average into your profits, not into your losses. In other words, where's a trade that we were winning now, like this, for example? If you were going to average into the trade, you don't want to average into the loss. This is now a winning trade, so it's going against us a bit at the moment, heading for stop loss. But what you want to do is when it goes like into a decent profit, where that line is, you say to yourself, at that point, I actually want to throw a little bit more at the trade. I want to add to the trade if I can. Dollar cost average in, but don't dollar cost average a trade that's in a loss. And it's kind of always going to work against you. You're always going to pick the wrong trades. If you look at logic and you look at yourself and say, well, actually, I lose more trades than I win. Then you've got to look at it and say, well, all the trades that I thought were going to win were actually losers. So I've got to look at this and say, if I'm going to lose 6 out of 10 trades, then I'm risking the high amount on the 6 out of 10 trades. And then the other 4, I'm risking smaller amounts because I'm a bit scared of them and they all work out for me. So you've got to try and keep it the same. If you know what it's doing to you, it's affecting your overall performance at the end of the day. I understand it. We've all done it. I've done it a lot. I've done it where I don't feel like getting into a trade at a high level because I'm not confident with it. And then I learned, do you know what? If you're not confident with a trade, don't take it. Take another trade. Do something else. If you're not confident that the trade's going to work out for you, just don't touch it. Don't trade it because then you're not confident. Don't try and trade half or a little bit or whatever or have fear of missing out. FOMO is a big issue in trading because that's why you're doing it. The reason you're doing it is because you have FOMO. Because you feel like, but if I don't take this trade, I'm going to miss out on it. So I'm going to take half a trade. And that ends up not working out for you in the long run. Perhaps you'll have a whole bunch of half trades and a whole bunch of full trades. But like I say, if you don't like the trade, don't take it. Take the trades that you're confident in. Take the trades that you feel, I got a feeling this is going to go that way. Manage the trade and then work with that. You know, like I've said to you guys before, what you can do, you can take the systems off 1, 2, 3, 3, 6, 9 charts here. Okay, 9 charts. We could sit here right now. Look, if this wasn't a funded account, we could sit here right now and take a trade on each of these and just go long, short, long, short, short, long, short, short, long, short. Okay, and just put these trades in and leave them and manage them. Okay, guaranteed at least 3 of them will win. Okay, out of the 9. It's not great odds, is it? Because you're going to lose 6 out of 9. Oh, horrible odds. But if you manage it correctly, if those 6 that lose will lose 500, 1,000, 1,500. So those 6 that lose 1,500. And those 3 that win, okay, just let's say you get a 2-to-1. Those 3 that win get 1,500. Do you know what? You end up on a break even. You end up on a 0. But in fact, if you do it right and you make more, you could probably end up with a profit on those 3 if they all reach target. And that's how it works. But if you now take these 9 trades and you say, on those 3 trades, I'm going to risk $125, and on those 6 trades, I'm going to risk $250, well, then you've got a problem. Because what happens is you lose those 6 trades, you lose $1,500, and you win, work it out, $750. You're $750 in the hole. And you should have been at break even. That's the problem. Unless, of course, you were able to follow that up to the moon, in which case maybe you would have made it. So much easier if you keep the loss the same to manage the trades. That's how it works. That's how the mathematics behind the whole principle of the strategy works. You can make more money on the 3 wins just by following it up, adding to the trade and pushing the winners. You can make a lot more money on them. In fact, many times you can make a 4-to-1, a 5-to-1 on a win quite easily if it's a good runner. In that case, it negates all of these stupid losses. But all I'm saying is, if you keep the amounts the same, you can literally win 3 out of 9 trades, still be profitable. If there was a 10th trade and you lost 6 and you won 4, then you'd be in profit by $250 or $500. Sorry, $500 in profit. Not bad, actually. You look at the percentages. If it was in thousands, it would be $5,000 profit. The thing is, Tywald, what I find, and I said it's Sir Lunch now, dude, all my career, and I've been doing this for 33, 34 years, a really long time, okay? Since the dawn of time. When they were building Egyptian pyramids, I started trading because I liked it. I enjoyed it. I do it for fun, right? And all those years, I realized that the majority, and now listen to this, the majority of the trades that I take will initially turn against me. And I used to ask myself the question, is the market watching me? Is there some ghost watching me and thinking, Rob's taken a trade. Let's turn that around and go against him. Because that's what you start to feel like after a while, especially when it happens on a regular basis. You're thinking, what on earth? Why is it every single time I take a trade, the damn thing goes against me? No, it's normal. It's normal because normally when you're entering the trade at a point where it's probably at its limit and it has to finish that limit generally. And then that trade just sort of goes against you a little bit and then it'll go in your favor. And even if it's going the right way, where's the Brent crude oil? For example here, even if it's going the right way, it might have to come back against you before it turns and goes the right way, as in this case, before it turns and actually goes the right way for you. It might have to just turn against you a little bit before it finds its feet and decides, oh no, you know what, we should rather go the other way. And this is something that happens on a regular basis. It always happens because it's on its limits. And there's a whole bunch of people who are saying, oh no, that's got to be short, so they're all going to sell. No, okay. It all depends. Said I see it is turning against me. Okay. And as I said to you guys, the minute I get into Brent crude oil and I take the trade, which I did on the other side, that's 65. It's going to go back down to 60 again. That's going to drive me insane. But yeah, that's oil. I'm used to it. It's okay. At least this one's starting to work out. It's very undecided at the moment. Not a lot going on there. The interesting thing to see today is what's going to happen with the US 500. It's going to be very interesting to see what's going to happen with this. Is it going to go up? Is it going to go down? Is it going to fall off the bus? It really, really is dependent on today's news and how everybody feels about things. I think we're going to get a bit of euphoria, a bit of a relief rally. The other thing is there's going to be a lot of money flowing into the market once they open the floodgates. And I think that could have an effect on absolutely everything. You know, because the money flow is gonna flow, and it's gonna flow hard. That could push this up quite a bit. You see what Carl said here is trading for 2 years, didn't lose money, didn't make money. And this is normally the case in trading. In the beginning, very much about survival. It's so much about survival more than anything else. It's not easy to make a profit. That's why I was having such a good laugh when I saw the video and the guy said, no, it's easy to turn small money into big money. Or if you've got $5,000 only, just take it and throw it at the market when the market's at the bottom. And it'll make you a fortune. And that's brilliant. Absolutely brilliant. Why didn't I think of that? Wow, that's just insane. There's only one problem. And that is when it gets to the bottom, how do you know it's at the bottom? And who's got the nerve at the so-called bottom to throw every last cent they've got at the market? Who's got that nerve? Who can do that? Even in a share. I mean, you can tell that it's cheap. But what is cheap in the market? You see, it's a supermarket mentality. It's relative. It's relative to the way the world is moving and what's happening in the world at the moment. Let's say you're going into a world war, like the Second World War, now the third, I suppose. You go into the war and the markets come crashing down. Okay, obviously, they come crashing down. And they keep going down, they keep going down, they keep going down. Now, you 1 year into the war, the market's at an all-time low, everybody's bankrupt, everybody's broke. And do you buy then? Do you go, we're 1 year in now, so I'll buy? You got two problems now, because firstly, you don't know when that war's going to end. And secondly, you don't know if you're at the bottom. Are you at the bottom? Or not? Where do we go from here? So when exactly do you buy that market? The only time you do it is on confirmation. So in other words, on confirmation that said war has ended, good confirmation, everyone surrendered, everyone said, it's all good. 5 years down the line, you can get back into the market. That would be a good time. And also on a break of structure after that's happened, then you can look at that. But to just say when the market's at the bottom, throw your money in, ain't no one going to be able to do that. Now, let's say it's just a normal correction, just a normal day-to-day, every day. It's falling down because the market's been shut down for a few weeks. The results are pretty bad in the jobs figures. The results are pretty bad in the CPI. The economy is looking a bit rough. People are unemployed, so on and so on. So the market starts coming down step by step by step by step. And that doesn't fall with big red candles. It sort of comes down step by step by step by step. And it falls at a slow pace. It's going to be insanely difficult for you to figure out where the bottom is. No one can. And the only way to do that is on a break of structure. So if you get a break of structure, you might be able to look at it and say, oh, there's a break of structure. You see, there's a break of structure. This was a bearish scenario. Big green candle, broke the trend. That's a break of structure. Second candle, starting to push to the upside. And of course, if it breaks that resistance, even more so. That is a break of structure. Then you can say, that trend's changed, but that's a short-term trend. That's on a 4-hour chart for a couple of days. If you're looking for a major bottom, like a correction bottom, a bottom from a crash, then you're looking at weekly charts. You're looking at an overall picture. Now, another good way to pick up where you need to put your money in for them on the markets to make some money going up is if you're really patient and you've got this $5,000 that you can hold on to forever. What I would do, and the best thing to do, and this is very much like investing, guys, and it's very much like set and forget, is wait for the 50-day moving average to cross back over the 200-day moving average to the upside, giving you the golden cross. And at that moment, you can put all your money in and buy. Because then the market has changed sentiment and it's going north. And like I said to you guys earlier, for me, that'll be me. And then the market will have moved halfway up by the time it gets there. So I'm halfway in by the time I get there. So I'm not going to make the same profit as the guy who found the bottom, who put his money in right at the bottom, because I don't know how he did that in the first place. Because I would wait. I would wait for that change. I would wait for that break of structure. I would wait for that golden cross before I take my lost money and throw it at a market that's recovering from a crash. So it's so easy, isn't it? So easy to trade. It's so easy to make $5,000 into $100,000. It's just, a click of a finger will do that. I just took a trade on Brent crude oil. It's just turned against me. I've been doing this for 34 years thinking, that'll go up. Oh, well, guess what? You got that wrong, didn't you? It's just, that's the market. It's 50-50. Nobody can call it. You don't have a crystal ball. I don't have a crystal ball. Nobody can tell me what's going to happen next. All I can do is manage the trade and hope that the trades that I take go in my favor, because I would much rather have 6 out of 10 trades going in my favor than 3 out of 10 trades going in my favor. Let's be fair. I mean, wouldn't that be better? Yeah, certainly. So, yeah. I've actually, I see a lot of you guys saying it took you 2 years to be break even, things like that. I was actually very, very lucky, probably because I started trading before leverage trading. So in other words, when I started trading, there was no leverage trading, there was no computers, nothing like that. So you could call my trading more like investing. In other words, my trading was not done on the click of a button and on 4-hour charts and things like that. It was done on daily and buying the newspaper and looking at the prices and working it out on a pen and pencil. And then you only got one share for $1 sort of thing. It was 1-to-1. There was no leverage or anything like that. And selling and buying a trade was a day out. So you had to be, you had to be quite wide on how you made your profit. You couldn't like buy now and sell in 5 minutes. It was like I would buy it, hold it for the day, check the price at the end of the day, probably hold it for a few days, and then phone the broker and say, okay, you can sell that now because I've made a little profit. And that would be it. That's how you would make your money. That's why I didn't believe in stop loss in those days either. But stop loss didn't really matter in those days because you weren't leveraged. It was 1-to-1. So the worst case that could happen to you is your share could go to zero. Yeah, not happening. So very much a case of I learned to trade that way. So by the time that leverage trading came around, I was already pretty much doing okay. Where the surprise came to me with leverage trading was it was a bit of a shock at how quickly you could lose money. And that's what I had to work around. That's what I had to figure out. So I think my first year of leverage trading was difficult, to say the least. I can't remember if I made a profit or a loss. It was pretty break even as well. But it was difficult. It was tough. And in those days, I wasn't really too pedantic about how much I made or anything like that. I was just willy-nilly. And it was only, computers came in very soon after I started, and leverage trading came in very soon, a couple of years it was there. But the leverage trading was a bit of a shock to everyone, not just me. Every trader that I knew and everyone that was in the game was like still figuring this out, still trying to work out this whole scenario. And, our brains had to change as to how we worked with the markets based on the fact that suddenly the broker was giving you 100,000 for your 10,000 at that time. And you were getting charged these different fees, and you were getting charged for overnight. It was all quite complicated. So it was quite a surprise to me at that time how much you could actually lose and how quickly you could lose an account if you weren't careful. I learned very quickly to be careful, and I broke even. I was pretty lucky. But then you start to learn to work around it and all the rest of it. I feel for the new traders that get into the market these days, because it's much more daunting, because you come in and everything's fast, everything's moving, and the people are just grabbing your money. And believe me, guys, the brokers aren't there for your convenience. These guys are not providing leveraged markets for your convenience. They're providing you a leveraged market because they want to make a profit. They want to make a profit. Same goes for funded accounts. They're not providing you with funded accounts for your convenience. They're providing it so they can make a profit. And brokers, leverage brokers, are exactly the same. Normal brokers too. They were there to make a profit. They used to make a profit out of the fees. So don't think that these brokers are sitting there going, we want you to win. I'll tell you that. But they don't really. They want to make a profit. That's what they want to do. They're not there for your convenience. So that's where we all make our mistake as well. Oh, this is a great broker. He really cares about me. He cares about your money as well. So keep that in mind when you're trading as well. Particularly leverage trading. It's very daunting, very quick and very fast. You must remember, if a broker's offering you more leverage, then they're going to get your money. That's their plan. They're going to get your money. They're offering you more leverage. They're going to clean you out. Watch how much leverage you take. You know, a lot of guys boast to me, I got 500 to 1 leverage. Do yourself a favor. If you can, try and get 100 to 1. Better. 500 to 1. Sure. Those are the big ones. We've got those and we trade with those. And the guys boast about it. Don't boast about it. You're going to get wiped out. You don't know what you're doing. So try and keep that in mind when you're trading. Try and watch out. Try and keep yourself on the right side of the bus. Let's have a look at the news, shall we? Let's see if we can see the news today. Is it there? Let's go and have a look at it and see what it says, shall we? What's on the news? Senate approves bill to end shutdown, passes it on to the House. That's actually quite interesting. SoftBank unloads Nvidia stake for 5.8 billion in surprise move. Ouch. probably going to hurt. Nah, I'm still so much in profit there. Why would I care? Okay. Wall Street's AI-driven rally just got another vote of confidence. Switzerland moves close to sealing big cut news tariffs. Gold adds the biggest jump since May amid rate cut bets. Oh, there's your problem with gold, guys. You know, we talked about gold earlier and about the short trade and about why it might come down. Well, there's why it might come down. I don't think we're going to get a rate cut. And I think it might surprise. Yeah, I think it's going to surprise. Nvidia back call with shares fall as data center delay hits annual revenue. Google to invest mid-single digit. Nvidia could be a problem. Well, I've always been a proud owner of Nvidia, so well, we'll just keep it. Well, the deal's heading for the House vote, okay? And that's important to note as well, because what happens if it doesn't work out? That's going to be quite interesting as well. Yeah, always interesting. Always a thought. What if it goes against them? There's your gold. Betting on rate cuts. Great idea. Why don't you just bet on rate cuts, don't you? Absolutely brilliant. I love it to bits. Okay. Let's just have a look. Why is this doing this now? Why is it doing the old circular thing? Is the thing still working? Is everything still there? That's a thing I don't like. Trade with somebody you don't like, you win. Like props. Traders most certainly, I mean brokers most certainly, they don't want, they're not interested in you winning, even if they're a good broker. All they're interested in is making your money as much as possible. That's what they want. I had the broker I deal with here, I've dealt with for many years, and we had lunch together and all that a few times, so yeah, we're okay. But yeah, there's a lot more to it than meets the eye. People think that they're just like the most important thing on earth, and they're actually not. The US 500 is a little bit iffy here. There's the next thing, I was talking about now in the news. It seems there still has to be a vote on this shutdown. Everybody's pretty confident that it's going to go through. There's a lot of euphoria going around that this is going to be resolved now. And you've got these lovely green candles going to the upside on the indexes. What if that vote doesn't work out? What if there's a sudden change? All that euphoria goes away. And then you end up with the short trade. Bit tricky. And then you've also got the Nvidia thing going on and a few other things going on in the market which could cause issues. So I'd be cautious, a little bit cautious with regards to what's happening there. Wouldn't get too excited too quickly. That could be an issue. Yes, prop firms do not want you to win, that's for sure. Absolutely. Something's going on in the background on my computer here, which is giving me a bit of a headache. I don't know what. So I think on that note, I'm going to end the live show today. It's pretty much the right time. And I'm going to head on and do my thing. It's been fun talking to you guys. It's been fun having you guys here. Don't forget, for those of you who weren't here at the beginning of the show, the first few minutes we talked a lot of rubbish like I'm doing now. And then we spent 10 minutes going over risk management. And in every live show, I'm giving you guys a little bit of market information, a little bit of training, something useful towards your trading. Hopefully it's useful. If it's not, tell me. I'll look at something else. But I do like to go over something in every single live show to make it worth your while at least as well. so you can enjoy it. Guys, I've got a short version. I know I've made it AI, but I've got shorts versions which give you a rundown on the market every day, and it's basically less than 3 minutes. It just gives you a rundown on what's happening fundamentally on the markets every single day. So do yourself a favor, go and watch those shorts. They'll help you. I actually put them on the Telegram channel as well for you to watch. And it's useful information. And then, of course, twice a week, you get the training video. And then do join us for the live shows every Tuesday and Thursday. Thursday, we'll be back at 2 o'clock. And we've got the members videos in the morning. And on that note, go and make lots of money. Go and enjoy your day. Go and make a fortune and come back and tell me about it. SLA, I do hope that you'll make money on the Brent crude oil, that it will go long and that will break the structure and go the other way. Unless, of course, Blue Mango goes short, in which case both of us are in trouble here. And then there's the Bitcoin that's going short, hopefully, but it could go against us. Let's see what happens with the government shutdown later. Let's see what it does to the markets. If you can, try not to trade too much around the news, because it probably will spike and it probably will take out your stop losses. Thanks for watching. I'll chat to you guys soon. Cheers. Ciao.